If you clicked on this video because you want to find an easy shortcut to becoming rich, then I'm sorry to inform you that there are no such shortcuts. Don't get me wrong, you will find videos about them, but they usually don't work. But if you want to learn about a slightly longer and slightly harder way to actually achieve financial independence, then you are at the right place. So first, what is financial independence? Is it lying on the beach and sipping a margarita? Well, everyone can define it in a slightly different way. But in general, if you have assets that generate enough income to support your lifestyle, then you are financially independent. You do not have to rely on your work or other people to pay your bills. Now, that does not mean you have to retire, but you can make more decisions in your life without worrying about money. So, if you reduce regular expenses while accumulating assets that generate income, you are probably on the right path. So, these are the 5 most important things you need to consider to achieve financial independence. Richest Man in Babylon should be the first book you read when you want to start your journey to financial independence. It is a series of really fun and interesting stories based in ancient Babylon, and they teach the fundamentals of saving money, getting out of debt, and building wealth. And at the core of that is the pay yourself first rule. Basically, the idea of paying yourself first is that when you get any money into your bank account, the first thing you do is you take 10% or 15% or whatever percentage you want to a separate bank account. And that money is for you. Everything else is for other people. You can pay your bills, buy food, clothes, go out and have a good time because that money can be spent and you can give it to other people. But the 10-15% that is in the other account is just for you. Now, getting out of debt and saving money is a good start, but it's not going to make you wealthy. After you actually have some cash, then you have to invest it. You have to make it work for you. And to do that, you have to learn how money works. And for that, I strongly encourage you to read a book called Rich Dad, Poor Dad, which is also an easy read focusing on the life story of the author. So it's a great place to start. But this book concentrates mainly on creating financial independence by starting a business and investing in real estate. Now, they are very interesting possibilities, and we will get back to them in a minute. But if you want to invest on the stock market, you should read a bit more. I would really start with a book by Peter Lynch called One Up on Wall Street. I think it does a really great job at explaining how investing, especially value investing, works, and how an average person like you and me can have really good results as individual investors. I'm sorry to inform you, but there really is no such thing as passive income. The name sounds great, but it is a bit misleading. It suggests that you can be passive, not do anything, and get income. What it should be called is delayed gratification income, because you always have to put up the work, build a product, build a business, work to get the capital, and so on. But if you are willing to delay the gratification, you may create a business, a system that will make money without your work. And if you work, you are basically trading your time for money. But to achieve financial independence, you have to earn money even when you sleep. And to do that, you either have to make your money work for you, and that is investing, or make other people work for you, and that is creating a business. And a great book about creating a small business is The E-Myth Revisited. It highlights what is the difference between creating a business that works for us and creating a workplace for ourselves. So that is another book worth reading. Now, whatever road you choose, investing in real estate, investing in stocks, creating a business, or maybe mixing all of them together, one thing that you have to be aware of is that you have to stay disciplined. If you do something for a short time and then focus on something else, well, you should not expect exceptional results. Charlie Munger has a saying that to achieve success, we should find a simple idea and take it very seriously. So how can we make self-discipline easier? Well, for example, when it comes to paying ourselves first, a great thing to do is to automate the process, to set our bank account in such a way that every time we get money into it, 10 or 15% or whatever percentage you want to choose goes to the other account that is just for us and our investments and not for spending. And that really makes saving money much easier. And believe me, there are going to be some really tough moments in your life. And you may have to make a big step backwards on this financial journey. But if you manage to stay disciplined, if you manage to put aside a fair amount of your income and invest it wisely, you are going to have a much bigger chance of achieving your financial goals. And one last thing, enjoy the process. It is going to take a lot of time, so you better enjoy it, because spending a fair amount of your life chasing your dream can be a fascinating and fulfilling journey, or it may be a miserable journey. And first of all, what is the point of making our lives miserable? And secondly, how long will we last on a miserable road? And how long will we last on the road that gives us joy? So remember that it's not only the end goal of financial independence that is important, but also the road that leads to it. So enjoy the journey, appreciate small achievements, and you may get to your goal faster than you think, because we all know that time flies when we're having fun. Thanks for watching, and see you in the next one.